Hello everyone, welcome to the Mortgage Brothers Show interest rate update. Today is Thursday, April 21st, and we're going to go over interest rates today, but we will also, if you stay with me through the rest of this video, I'm going to dispel this idea that a lot of people are starting to talk about. As crazy as the market is out there with housing, a lot of people are saying, you know what, if we hit a recession, we're going to see house prices fall. If things are so bad out there, we're in such a bubble that house prices have to go down. I'm going to dispel that, at least show you evidence why you have to be careful of basically believing that view. So we'll get right into this here shortly, but a quick disclaimer, this is not financial advice. This is for informational purposes only. And also we are only licensed in the state of Arizona, so we can only help borrowers who are in Arizona looking to buy a house or to refinance. We can give you a mortgage, but anyone else from any other state, this is still a great channel to subscribe to because the content in this video and all the loan options and programs are nationally originated. So this is still a very relevant video to follow and share. And so if you, again, if you subscribe and click the notification button and the like button, you'll be sure to be notified because we do this Monday through Friday. Okay, so where are we today with interest rates? We are at a 30-year fix at 4.99%. We see the 30-year fix at 4.125%. The 5-year adjustable rate mortgage at 3.875%. The 30-year fix FHA at 4.49%. And then the 30-year fixed VA loan at 4.875%. And here are the loan assumptions below. All right, so let's start with this chart here. The 30-year fix since 1971. We've seen since 1986 this downward channel, right? Interest rates. Now, a lot of people love charts. A lot of you, maybe you don't. But this is showing how high they were in 1981, almost 18%. And again, you see how they just have come down ever since. And this is because the money printing, the amount of money that and debt that our Senate and House have allowed to be printed through the wars, recessions, stimulus. When you hear stimulus checks, stimulus anything, quantitative easing, all these things put downward pressure on the rates. And so right now, a couple weeks ago, we have busted out. You can see where right now that interest rate's about 5% on that 30-year fix, and it went right above this channel. Now, will we stay above it? Or at least I don't believe so for very long. A lot of industry professionals are saying this as well, but that we do believe that the interest rates will come down. Now, when will they come down? I believe they will come down into this channel again. But, and again, these little orange markings are my markings just to indicate where I kind of see in the time frame. So perhaps the later this year in 2022 in the fourth quarter, maybe in 2023 and 2024, we'll see that happen. But let's go into the next slide, because what will cause the rates to go back down. So if anyone's looking at these rates and wondering, oh my gosh, they're so high, I can't afford it, or I don't, it seems impossible to afford these rates. I think that the important way to look at it is that I do think rates are coming down, and inflation right now in red, as you can see, is that this is actually 8.5%. What will drive the rates down will be a recession. I'm telling you this, again, this is for informational purposes. I don't know what will happen, but you've probably started hearing people talk about recessions. At least maybe in 2023, 2024. When the recession occurs, it will likely start what we call, the Federal Reserve is going to stop raising rates. They're going to all of a sudden think of a way, or the House and Senate will think of a way to stimulate the economy again. And all of a sudden, we're going to be putting out stimulus again. Rates will come back down because our country can't afford the debt. The average Americans can't afford, anything higher than where rates are at. So we'll likely see rates come back down. So what we'll see inflation up here right now peaking. It hasn't been this high for 41 years, But the important thing about this chart is to show you that interest rates rise after inflation rises, and interest rates fall after inflation falls. So what will cause the inflation to fall? A recession, potential recession coming. Now, I'm going to show you in a little bit of slides. Like that does not mean that house prices are going down. So we'll get to that here soon. But inflation is a good indicator, or good recession indicator. Over the last 70 years, as you can see in this channel, inflation has not been this high for 41 years. It was 1981 when we last saw inflation this high. But in the last 70 years, inflation has peaked right before 9 out of 12 recessions. Okay, right before 9 out of 12 recessions started, inflation peaked. I'm hoping that makes sense. I know that a lot of this stuff is like all these eye charts can be hard, but this has been a good indicator 9 out of 12 times, and so that's really good odds. So right now we see this peak, so that's a good indicator that potentially a recession is near. Another good indicator is unemployment. The unemployment rate is a good indicator, as we can see for the last 70 years. How they're related. You'll notice that when unemployment hits a low, you'll see it kind of tabletop down there, or just kind of hits a floor, and then it rises. The moment unemployment starts rising again, it's basically the beginning of a new recession. And just all the way back 70 years, you will see we are right at that floor. Okay, we're at a low. We're absolutely at a low for unemployment. So things seem great out there, but a lot of you might be thinking, you know what, I do know if things getting maybe a little harder, corporations are going to have their debt, corporations that have debt out there, their interest rates just went up, because that's what happens when interest rates go up in general. The debt of the companies who have a lot of employees, it just went up. So if this could level out here on the floor, but if it starts rising again, that's something we're going to be looking for the next recession. All right, the big question a lot of people are asking is, do home prices go down during recessions? Most people think so. I mean, you have to look into the data to really see if it's true. If you look, in the last 45 years, this is the home price index that's put out by the St. Louis Fed. And so it's a government organization, but for the last 45 years, you'll see these recessions in gray. In fact, that's something I didn't tell you guys before in those other charts. The gray section of the chart are the recession periods. All right, so these are the recessions, and right before during the recessions, there have been how many is this? I say it here in the chart here. Okay, yeah, so right here, yeah. There's been 6 recessions in the last 45 years, but only one time did house prices actually go down, and that was the Great Housing Recession in 2008 and 2009. Now, what's interesting about 2008 and 2009, what caused the recession was bad mortgages. It was the mortgages themselves. The mortgage underwriting guidelines were so poor that it actually caused the recession itself. A typical recession isn't caused by housing problems or mortgage problems. It's usually unemployment, world wars, or some event that happens outside of it. So what you'll notice is 5 out of the 6 recessions, home prices have gone up. And right now, what is our next problem that we're going to have? It's not mortgages. Mortgages today are very different than they were in 2008. I don't see us having mortgage defaults. We still underwrite mortgages there's still a lot of scrutiny. Mortgages are still hard to get approved. We still look at everything. Everything's still very thorough. So now I could be wrong that maybe home prices do go down, but if history is any indicator of what will happen in the future, it makes a pretty good case that it is likely home prices will not continue or will not go down during the next recession. So when you look at the future, 2020, 2023, 2024, you will likely see higher prices than you see today. But also you will probably see lower interest rates. So if you buy in the market today, the idea that you're stuck with that rate probably isn't true. You probably will be able to refinance that in the coming years into a lower rate. But again, I'm telling a lot of my clients right now to just be careful of buying into the idea that you're going to time the market, that you're going to somehow either sell your house now, wait for the market to crash, and then buy in. Be very careful because history is not on your side on that. So make sure not to listen to the media on this. That's something that I've been hearing since 2015, that house prices are going to be going down, that we're in some type of bubble. Just be very careful with what you listen to, especially the media. And that includes me. I mean, what you're listening to on YouTube, me, or anyone else who's giving you information, be sure to really give it a lot of thought, look at the data, and of course, let me know in the description below if you agree or disagree with me on what my charts and what my research has shown. And I'll be back tomorrow for the next interest rate update. So I hope everyone has a great day. Take care. Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.